Hey, everybody. It is Chuck Barone, Tuesday, October the 8th, 2024. Another day of freaking madness, guys. Although madness to the upside, I guess. The stock market blasting off today. I got to tell you, man, it just seems like these markets have a buy. I think the markets really want to take off. I think that everything is there for the markets to really have a pretty strong run. The only problem we have is all of these little fringy things going off on the sides. Like if you look at earnings and business in America, things are going okay. Now, what could wreck that? Well, you got a war brewing in the Middle East that could spike the price of oil over $100 per barrel. That could put a big wrench in the gears. You got consumers tapped out. That could put a big wrench in the gears. You got a big crazy election coming up. That could put a wrench in the gears. You got so much uncertainty about really, is there really any threat of recession now? I mean, it seems like we've been living under this recession cloud for so freaking long, guys, that we can't get past it until we actually get this recession, which has been a long freaking time coming. Haven't had it yet. But anyway, I babble. Sorry. Let me take a half a second before I get rolling here. Welcome everybody to the show. As always, guys, thank you so much for your support for the show. And if always, just you guys mean the world to me, man. It keeps this show going. And I appreciate everybody on the chat too, the usual suspects. Nice to see everybody on. All right, so let's talk about this crazy ass world we're living in, this market today. So the market rally is up today. And they're saying it's because oil prices came down. And they did pretty dramatically after a dramatic rise yesterday. So this Middle Eastern thing with Israel and Iran going back and forth. The U.S. is in there right now. Please, please, let's not blow up the world, guys. It's like, so it's one day, well, maybe it could blow up. Oil spikes, market tanks. Next day, well, maybe it's not so bad. Oil tanks, market spikes. It's like, how are you supposed to invest in that kind of market? It's just bananas, man. But the markets, like in this bad news on oil, jumped higher today. So the Dow rally is up 126 points, sitting at 42,080 points. A great number for the Dow. The NASDAQ, led by NVIDIA, up again, up 259 points today, 18,182 on the NASDAQ. And the S&P rallies 55 points, 5,791 on the S&P 500. So guys, all the way across the board, just like yesterday was down across the board, well, today they get it all back. The craziest markets where, for a long time, bad news was good news. Now maybe where good news is good news, but maybe not good news. And I got to say, now, if I'm a betting man, and I kind of am, I guess, I'm betting that this economy keeps going at least through the holidays. I think that, we have momentum. We're not really seeing layoffs, job losses. Americans typically are going to do a lot of their spending during this season. Holidays, people are going to, I think Americans spend around $3 billion just on candy for Halloween. So we got big economic holidays coming that'll help keep the economy high. I was reading an interesting article today. I guess our trade deficit fell pretty heavily this past month, and they're saying that could add quite a significant bump to GDP numbers, which is interesting. GDP numbers already much higher than I think the Fed would want and most people realize. So the stock market has reason to be up, but like I was saying yesterday, it's climbing this wall of worry where there's just so many things that could change it all around. The bond market today, kind of a weird day in the bond market. The 10-year sells off just a little bit with the yields rising on the 10-year up just 1 basis point. The 10-year now at 4.03%. The 2-year actually falls 4 basis points. So people are buying shorter term paper. 3.96% now on the 2-year treasury. So, a weird day where you have people buying shorter term paper Interesting that people wanted to buy bonds when the stock market was rallying up like that. That typically doesn't happen. But I guess the people want to be buying these short-term bonds now. They still believe we're going to get a quarter point in November. We'll see. So, you got a shot at some cap gains there. If you're buying at the peak of the rate and rates get cut, obviously you're going to make a little bit of a score there. So I think that's why traders buying the shorter term stuff. Dollars today, the dollar rallies up again, but only 3 basis points. It's kind of stalled out here, but it's sitting at 102.49, which is it's up more than 2 points since I got nervous when it was getting really close to 100 on the Mendoza line there. So a good strong dollar. I'm a strong dollar guy. Now I know that kind of goes against these big rate cuts because rate cuts are going to weaken the dollar, but I'm not for these rate cuts either, guys. I think we really need to have a normal interest rate environment where going into debt is painful and costs money, and saving money is rewarded by some interest on that savings. I think we need to get back to that if we want to ever try to recover as a country. Precious metals today, not a great day. Gold falls $20.20, $2,622.90 for an ounce of gold. Still a great strong number. Silver falls 98 cents today, $30.67 for an ounce of silver. Come on, silver, we need a bounce, man. I do not like it getting so close to $30. We need it. We know that is going to be our support now. If we break down under that, we could have a more difficult time getting back through it and staying there. Oil today, like I mentioned in the beginning, oil comes down pretty bigly today, down $3.27 per barrel, sitting at $73.87 for a barrel of West Texas Intermediate, right back where we expect it to be in our trough between 70 and 75. Now, this obviously is a fluid situation with oil prices. Anything could change at any moment. They're talking about I think Biden needs to go back to the beach. I think I've said that before. But Biden actually came out and was talking about Israel striking the island where all the oil production from Iran kind of gets processed at. And that would be bad for global oil prices, guys. So we'll see where this continues to go. Hopefully they'll settle this before too much freaking longer, man. Because you got all this uncertainty while we're trying to have a bull market here, man. Anyway, we'll see where that goes, and we're going to, of course, watch that very closely for you guys. Bitcoin today falls $1,036, taking a little bit of a beating today. Surprising, though, because Bitcoin has been following the stock market. So usually when the stock market rallies, Bitcoin right behind. Not today. Bitcoin now sitting 62,262. So even with all these corrections, it looks like Bitcoin's lost a little bit of momentum, and it's run toward another shot at 70,000, but still doing a pretty decent job of holding support at over 60 grand. All right, now let's talk about stuff today. Now I was reading, as I researched, pretty much all through the night and into the day for today's show, this one article this is the one that affected me, man. The U.S. budget deficit. Now, the U.S. fiscal year runs from October 1 to September, end of September, okay? So the year ended September. The deficit for the United States for that fiscal year climbed all the way up to $1.8 trillion freaking dollars. Now, remember when hitting $1 trillion deficit freaked everybody out? I remember when the U.S. debt went over $1 trillion, everybody was freaking out, screaming bloody murder at Reagan for it. So just so interesting to me now that nobody seems to care. Nobody's talking about it. I don't hear Trump talking about deficit reduction. They use this same old bullshit. Well, we're going to grow our way out of it, but we'll look at it. If the economy is good, bullshit, buddy, okay? And Kamala, all she's talking about is more ways to spend money. So this is not going to get any better, guys. Interest payments now. Listen to this. Interest payments on the U.S. debt for fiscal year ending September, $950 billion freaking dollars and climbing. The U.S. debt now stands at $35.75 trillion freaking dollars. And the Congressional Budget Office predicts that it will keep rising, hitting $50 trillion by 2030 on the trajectory we're on now. Can you imagine, guys? 50 trillion, really? I think that if the United States doesn't come up with something, let's say during the next presidential term, to do something about this debt issue, I think no one's going to believe we're ever going to pay this debt off. And when people stop believing they're going to be paid back when they lend you money, they stop lending you money. So we're going to see a gigantic, if that happened, you would see a spike in interest rates that would just, it would be crushing, literally. And now this is crazy because we're having $1.8 trillion deficit. Now that's understandable if you're in World War II or III. That's understandable if you're in some kind of Great Depression and you're trying to, stimulate your economy, get your economy breathing again. Okay, big deficits are understandable then. But that's not where we're at right now, guys. We're creating these giant deficits. This is happening during what they call peace and prosperity. We're supposed to be paying debt down when times are good, not adding $1.8 trillion onto already almost $36 trillion. This is really bad, guys. The United States of America, the most powerful, wealthiest country on earth. And what would happen? I got to say this. What would happen in our country if the government was forced to balance the budget tomorrow? What do you think they would do? You think they would just cut $1.8 trillion in spending? Is that what you believe? Where do they cut it from? Where do you cut 1.8 trillion? And that's like almost half the friggin' federal budget. So I'm thinking you would see big cuts. I'm thinking old people would be wigging out. I'm thinking poor people would really get screwed. And I'm thinking everybody else would suffer with giant tax increases as well. So I can tell you right now, guys, someday, I don't know when, but someday the United States is going to have to confront this debt. They're going to have to confront this deficit spending. And when they do, that's the scenario you can expect to play out. They'll create a giant crisis. They'll try to get everybody on board. They'll rile up the patriotism. And then they'll announce gigantic tax increases. They'll announce gigantic cuts to vital programs. We're going to have a government that basically is going to pay for defense and old people and interest. And that's pretty much all they're going to be able to do. And I don't even know if they're going to be able to do that. Because truthfully, if you add up Medicare and Medicaid, Social Security, defense, and now $950 billion in interest we're paying, that's more than the federal budget. So the answer to the question, it certainly looks like a big crisis is inevitable. Because I don't believe our political class has the guts to do anything about this. I think they're just going to kick the can down the road as far as they can. And then when they're forced to confront it, they're going to just try to put Band-Aids on it right away. And then when they're really forced to confront it, there's going to be a revolution in this friggin' country. When people come to understand how they've been screwed to the gills by both parties. This is not a red party, blue party bullshit deal, guys. They're both in on this. And neither one of them are doing anything to fix it. It's a fucking disaster. All right, moving on. This was another one that caught me today. Now, none of this is fiscal data that's going to move markets. But this was interesting. Credit card debt falls for the second time in the last 3 months. Isn't that something? Consumers putting the credit cards away, slamming the wallets closed. The economists and analysts are claiming that it's plateauing credit, plateauing. They're like, bullshit, man. I'll tell you what it is. Consumers are not tapped out on credit. They have access to credit, and probably plenty of it. They're tapped out on payments, man. That's what's killing people. Now imagine what it used to be. So let's say, just to use easy numbers and imaginary numbers, you got a $5,000 balance on your credit card. Used to be a payment of about $100. Now that same balance, you got a payment of about $180. Wait a minute. What the frig? Credit card payments were so cheap when rates were near zero. Now going up. And I think what people are looking at, and they're looking at their balances and they're looking at the payment, and now they're actually having a look at what their interest rate they're paying, and they're going, holy friggin' shit, I'm paying more than 20%, so I could have this friggin' whatever it is I don't need. So I think consumers finally having had enough of that crap. Now we'll see if this can last. I really believe that the government needs, and you've heard me say it already just on this show, the government needs to put policies in place that discourage debt, that punish debt, not punish it like you're going to jail or you're going to get killed, but punish it to make it a little bit more painful, much more painful than zero rates, right? And also higher rates are good because they encourage people to save money. Holding on to some of your hard-earned is a good idea, and people are really encouraged to do it if they can earn some money on that hard-earned and make their money actually go to work for them. It's been something that middle-class people haven't had much of lately with rates so low. You can't even have a savings account anymore. It's just ridiculous when you get a penny in interest at the end of the quarter, or 2 pennies, something fucking stupid. So anyway, consumers maybe making a move for the better. We'll see if it's actually a problem, they're tapped out, or it's a decision, they're smart. We'll see. Federal government came out in support, the Fed governors. Yeah, this was the one. 2 Fed governors, actually 3 today. Susan Collins, Adriana Kugler, John Williams, 3 Fred Yo-Yos, all coming out today talking up more rate cuts. I think the Fed realizes the market now spooked by that jobs number, afraid that these rate cuts that they've been pricing in and are basically basing the market expectations on are not going to happen. Pretty rare to get 3 of them out the same day. And John Williams is not just a regular Fed governor. He's chair of the Federal Reserve Bank in New York, which is probably, other than the chairman of the Federal Reserve himself, probably the most powerful of the Fed governors. So for him to be out talking up rate cuts, looks like we're probably, the way they're doing it, unless there's a reason for them not to, it looks like we're going to get another rate cut in November. Anyway, guys, that's it. Oh, one last thing. It was interesting. We all saw the news and we're all reading about Hurricane Milton, this monstrous Category 5 hurricane that's about to smash Florida. It was interesting to see that Disney World was open today. Everybody running away, evacuating the state of Florida. But Disney World figures, you know what? The hurricane's not going to hit till tonight. Let's keep the park open all day. Might as well make the money. You got to love this friggin' world we're living in. Anyway, guys, that's it for the day. I love and appreciate every single one of you people who are here on this video. Everybody on the chat, much appreciate all of you guys. We'll be back tomorrow. Tomorrow we'll start getting some data trickling in. Of course, I'll be here to bring you guys the news you need. Everybody go forth and have a good evening. Be back tomorrow. Until then, everybody, take care. Thanks.